Let's take a look at the market. How nervous do you think the US markets are likely to be, particularly with these figures coming out of Japan?
I think there's a lot of nervousness in the market, Andrea. I think there's a number of things to be concerned about at the moment. Principally, the US consumer has showed signs of flagging. Activity within the consumer sector has been poor. Auto sales have been poor. The housing market is still in a very distressed situation. And indeed, the non-residential construction market has been very weak all year. And the new part of the story, really, over the last few weeks, has been slightly more downbeat commentary from the US corporate sector. I can mention Estée Lauder, Cisco, and there's now some concern about capital investment spending intentions going forward for the rest of the year, and particularly into next year.
No, we had this sort of disconnect, if you like, between very good earnings figures and fairly poor, slightly depressed economic data coming out. Looking forward to 2011, have you got any estimates for earnings?
Well, interestingly, despite the fact that second quarter, Q2, was very strong for earnings performance within the corporate USA, we did note that as the quarter went on, estimates for 2011 started to fall. And that's really a function of the very poor, weak economic data we had throughout the month of July. It's continued into this month. It's one of the key reasons, of course, why the Fed has introduced QE Light. And indeed, if data gets quite a bit worse, there is an option for Bernanke to take out full QE. There is a moral hazard with this, of course. It'll be interesting to see if the bond market reacts positively or negatively to poor economic news on the perhaps enhanced opportunity of full QE. But going back to earnings, I think next year's earnings estimates will continue to have some cuts going forward. And it's really why the market has not made more gains despite a very strong second quarter.
What then, under these circumstances, is your current investment strategy? What kind of companies are you looking at and what sectors?
Well, we are very much focused on companies that can demonstrate a high consistency of earnings growth despite slow, anemic growth in the overall economy. We are very much focused on the more defensive sectors at the moment, albeit that is somewhat tactical, reflecting the increased uncertainty in the market on next year's earnings. We're looking at companies that really can do well whether the economy is strong or weak. And it's that consistency of earnings growth with maybe a slightly higher dividend yield that has been, that focus has been increased in our portfolio over the last few months.
Now, I did want to ask you about GM. Where do you think that stock is likely to be priced, and how do you think it's going to do in the current environment?
Well, of course, the prospectus hasn't been issued yet, and the debate is whether the GM market capitalization as a whole will be 50, 60, 70 billion. Clearly, there is a keen seller in the form of the US government who is a 61% owner. And we would guess that the Obama administration will be extremely keen to ensure that its ownership stake is below 50% ahead of the midterm elections. So we would expect the US government to be by far the largest seller, and of course will have much more to sell over the next couple of years, maybe in another 2 or 3 secondary public offerings. In addition, we expect GM to issue a small amount of primary equity to ensure that it's net cash positive, including against its debt and its underfunded pension. That would put it at quite an advantageous position against Ford, who, ironically, despite not going to bankruptcy, find their balance sheets in a much worse state than GM, who will be coming out of bankruptcy.
OK, Terry Ewing, thank you very much indeed for joining us today.